Welcome to F.A.C.E, Tim.
Hey Dale, how you doing?
Good. How are you?
Yeah,
Good to have you
well,
back.
I'm good. I'm good. I think I'm doing
So
better than
this
many.
historic market moves, a lot of overnight. Hard to hold a position. Are you mainly scalping, Tim?
I'll be honest. At the moment, I'm staying out today. I want to see how things progress at the start of the week because now that we've seen this kind of we've seen the initial moves. We've seen the kind of the shock move. And the gap
Yeah.
down, and in a few of the markets we've actually closed the gap now. So it's kind
You
of for me. I
wanna?
think we're in balanced markets.
Yeah,
For what's going on.
that's fair. And that did you want to share your screen and show what you're looking at?
Oh, hey,
No?
by the way, Dale, I just want to, I'm sorry. I just want to
okay.
interject really quick. And I want to say hello to Tim. Hey, Tim, how you doing?
Hey, yeah, good. Thank you.
Hey, thanks for joining us. I know you work with David Bell, and I interviewed him a couple of weeks back, and I just want to say hello to you, and thanks for joining us. And then also make sure you say hi to David when you talk to him today.
Thanks, mate. Yeah, I will definitely.
All right, take care.
Cheers, buddy. You too.
Actually, Tim, I saw a tweet by David yesterday where he was considering just getting flat the market, because of exactly what you were talking about, and and that what's happening in the Ukraine is having an effect on his psychology, his mentality, and I say I tip my hat to someone who knows when not to do things. It's very important. Doesn't show up on your P&L, but never good to force anything, especially leveraged investments, in my opinion.
Absolutely agree. He's feeling a bit better today, but I think it was probably the same for everyone. You're seeing these barrages
Maybe his
of images
girlfriend
over
was
the weekend.
his girlfriend might have been mad at him or something.
Oh, she's always mad at him. Don't worry about it.
All right, so looking at S&Ps here, I have kind of a wedge line coming in up around the 4,500 level, 4,480. Does that look doable?
I mean, it's all doable. I mean, I just think it's where I'm kind of really zoomed in right now on where we are, and I want to sort of look at the fundamentals more than anything else, more than any kind of technical levels at the moment. Because although we can definitely move technically, and it's definitely going to be a flow-driven market, for me to have any conviction on anything, I want to see what the market's reacting to.
Okay. All right. So we have the stew of geo risk and SWIFT system, knocking Russia off of it, and then we have the Fed in the background in a pickle. And I was thinking the one thing that could really take the heat off Powell, help Biden and his popularity, would be some type of moderate to decent break in the oil market. Is there anything you're seeing technically that would lead you to believe that we could at least pull back for a nice correction?
Yeah, correction. I mean, maybe a little bit, but I mean, you still got to look at the fundamentals of the market and think, where's the oil going to come from?
How about Iran? If the Republicans are getting enough phone calls from their from their constituents that are don't want to keep paying high gas prices, which I know people laugh at us Americans. We have the lowest, probably in the world. But to get that deal done with Iran, would that make a difference?
I mean, I think it would make a difference in the short term, but I already think there's certainly some of that kind of expectation in the price, and I think that maybe traders are starting to look ahead a little bit to some of the return of shale as well. But really, I think what we're looking at is Russia as above all else, and whether or not we're going to sort of take the difficult option with Russia and really make it very, very difficult for them to actually export the oil, which would obviously indicate, we're looking at self-harm, across the West, really, if they go to those levels, or if Russia just turns around unilaterally and says, you know what, we're not, we're going to take the self-harm ourselves. I'm struggling to really make the narrative case for anything lower, because you've got the geopolitical risk premium as well, and who are the allies, and who's going to sort of fall into which basket. And I don't see that you're actually going to be able to sort of really turn around and go, oh, it's okay, everything's sorted now, so we can start selling oil, even though it's quite clear that we're in in a difficult period where even if Iran does come back in, the OPEC countries are struggling to meet their quotas everywhere. So they're almost taking it in turns to not quite get the output up to the levels they're supposed to be, even though OPEC as a group keeps increasing the quotas each month.
How would Russia fund not only the invasion, but the occupation without selling oil?
Yeah, I mean that's the thing where I think I can't see them sort of going to that level. It's just a lot of thoughts bouncing around in my head, to be honest.
And
but yeah,
I mean, maybe even last week that high we put in gold, maybe that was to give the central bank that doesn't have any, is out of business today, reserves to it's like the war is also being fought not just on land but in the markets.
Yeah, totally agree on that. I mean, gold is one of those where people always say, it's the sort of the common kind of advice: buy gold in times of geopolitical uncertainty. And you're like, well, yeah, it does make sense. You've got to buy it. You've got to buy it in advance of the uncertainty, because by the time we've kind of come into that, we've seen what's happened. We spiked up to 1974 there. We've come straight back down again. And obviously at times, as we saw with the COVID crunch as well, that sort of that liquidity crunch comes in and people have to sell gold. They have to get out of positions because there's funding problems basically. And at the end of the day, you've got to have the currencies to settle everything. So, you end up selling whatever you can to get your dollars generally, which is maybe another one to come on to, another topic to come on to actually.
You're going to the dollar. So I wanted to ask you if you saw any signs. Euro. Euro, that's that low was not confirmed a week ago. And looks like we're coming back higher low. Do you like the euro for a short-term rally? But more importantly, the question is, do you think we have a significant low in place or close enough at the 111 level in the euro?
Yeah, I mean, it's certainly significant. It's a significant low, but whether or not it's going to hold is another question altogether. Because, I mean, again, just in the short term, just looking at what we're looking at today, I think this is the gap close area up here. If we can get up to that level, that's going to be interesting. But until then, I mean, ultimately, it's, in times of uncertainty, everyone needs dollars. I don't see the uncertainty lifting quickly. And Europe as a whole is it's the most exposed to all of this. What's the ECB going to do? Can they sort of, they were talking about hiking rates, which everyone was like, oh my God, the ECB actually getting, well, I was going to say hawkish, but that may be a step too far. It's non-dovish, as they've kind of been for years. And then obviously this has happened. How are they going to look at sort of hiking rates into a sort of stagflationary environment caused by high energy prices, as well as all of their companies being exposed to a lot of risks, along that kind of eastern border there, where they've obviously built up a lot of supply chains over the years, and a lot of good trade has been going on, and now a lot of that's compromised. So, yeah, I mean, I'm not a fan of the euro longer term. I'm really not. In normal environment, I'd say yes. This is good. You look at the price action, you think, okay, yeah, we're putting a low, we're putting in a higher low, great. But, I think a lot of things could go wrong for Europe. Europe could pay the biggest price economically for all of this.
Aussie holding up the best on days when the dollar is strong and stronger when the dollar is weaker. You have a view on the commodity currency since Russia is a commodity nation?
Yeah, this is going to be really interesting actually. Again, if you look, you saw there that the euro didn't close the overnight gap. All right, the Aussie, as we're looking at now, it's just pushing through it. And I'm very, very interested in the whole sort of in how commodity currencies are going to fare in all of this, because in theory, commodities really, they're in this environment, they should do well, just purely because of all of the uncertainty that's there and the general sort of expectation of shortages. So I do think that we could see, if we're going to see a rally in anything against the dollar, it's going to be in the commodity currencies, which seems really strange in a more of a risk-off environment. But we are where we are. It's it's peculiar. It's peculiar. It feels very strange to say.
I mean, if you want to look at something else affected by this, the wheat market, the grains have been one of the strongest commodity groups out there. And massive reversal in wheat, corn, and beans last week. I mean, to where they finish almost down $1 a bushel. So we're looking, there's wheat, pretty big reversal day.
Massive. But again, you've got to look at the the situation and
Yeah.
right. So I think really there's so much that depends on how this resolves. Okay, in Russia and in Ukraine with Russia. It's very clear that there's been a very united response, against the Russian aggression here, and I think that perhaps has taken Putin by surprise. I don't know. I don't like to speculate too much about what he's thinking. I don't think that's a good idea for anyone to do. But yeah, so obviously you've got Russia and Ukraine are responsible. I think it's 30% of all wheat exports come via is Russia and Ukraine. I think it's 20% Russian, 10% Ukraine, and corn as well. Ukraine and Russia are also about 20% of global exports. So if we continue with this conflict, what's going to happen to the farmers? Are they going to be able to plant? Are we going to see large scale destruction? Who knows? Who knows what actually is going to happen? And if there is large scale destruction, what does that mean for the supply chain to try and get all of that grain out? And there's so many potential sort of outcomes here that I don't think kind of predicting where these things are going to go is the way to go forward. It's much more a case of scenario planning. Thinking, okay, well, if this happens, then so if, for example, the escalation is there, then wheat and grains in general could go higher. Just because we've had this reversal, there's no reason why they couldn't go higher. Funding stress in the markets, that might depend on what the Fed does now. Maybe we'll hear from Powell. I think he's talking. Is it tomorrow or Wednesday? I haven't got the calendar in front of me. It's 2 days, isn't it?
Yeah. He's going to Congress to testify.
Exactly.
Humphrey used to call it Humphrey Hawkins Day.
Yes, that's it.
Yeah.
So we'll hear what the Fed are thinking
interesting
about this as well.
What I see is how we are always telling people, look at your weeklies and look at your dailies, and then drill down. I almost feel like you have to do the reverse now and almost forget about the weeklies and dailies and 4 hour longest term you should go. And this is when partial profits becomes more critical to your performance than ever, because you can have a market going your way and be up 80 pips and one headline, it's gone. If you didn't ring the register, it's not a profit till you take it. And in this environment, definitely tough to take home anything over the weekend. Look at these overnight moves. Better to react to them Sunday night and react to these overnight moves for possible fades or go with them. Then I just don't have the intestinal fortitude to really be a position trader in this kind of market.
Yeah, I would broadly agree with that. I think you have to maintain a bit of a view on the daily and weekly kind of timeframes. We've been looking at the DAX here for quite a while and saying how it looked like it was very looking very sick, and obviously we got the move very quickly down into that level there. But I agree. You've got to look at these things and try not to have too much of a bias, I think, is the way to do it. It's a case of preparation. You're looking at scenarios, looking at where the market might overshoot. Sizing down as well to account for the volatility, which I think is something that a lot of people really, really get caught out with in these kind of environments. With lower liquidity, sometimes you can see 2-3 times your usual ranges in markets. I mean, in commodities even more. We've seen them going limit up in next to no time. So yeah, I mean, that's definitely, you've got to size down to account for that, because the moves are likely to be larger and you're more likely to get slipped on your stop loss.
Yeah, not a market for amateurs. And
no,
you know what? Not even a market for skilled professionals, in my opinion.
No,
I know why David took a day off. I mean, it's hard to have conviction right now.
Yeah, absolutely. And again, because you've sort of seen this magnitude of move. I mean, you look at the DAX now and you look where it is, right? If it's back at sort of 14,795, you think, that's a sell. If it's down at 13,824, you think, I'll have a crack at a buy. But where it is now is literally in the middle of that now. It could go either way. The headlines could go either way. There's no edge. There's zero edge.
You need a coin with a bull on one side, bear on the other, and flip it.
Yeah, I don't think that's going to make for good returns, though.
Yeah, for your broker.
Oh God, yeah. Broker would be delighted. They'll send you the coin.
So Tim, anything new at the company with you and David? What are you guys doing into the new year? Any new projects, or where's the best place for people to get follow you guys and see what your thoughts are on the market, be it your website, would that be the best place, or
It
just
would,
follow
yep,
you on Twitter?
exactly. Oh, hang on, I spelled that right. Yeah.
I mean,
Okay, so
why talk
macrodz.com.
markets? We keep going. I've gotten the drift. I mean, we keep going from market to market, and we're strongly neutral. One thing I will say, Tim, I'm looking for a top in the dollar. I'd like to see one more push up towards Dixie 98. And I've been waiting for this for a long time. So, yeah, and one more shot down in euro. I know you don't like it, down towards 10.5. But I am looking for a turn in the dollar. I think that too would help alleviate some of the stress in the market, emerging markets, etc. So
I agree with you that I think it would, but whether or not we get it is another question altogether, because
yeah,
obviously what we're seeing now, it's, the dollar is king for a reason.
yeah. Wouldn't it be ironic that the euro
Mm.
puts in a major bottom after an invasion of an Eastern European country?
It would be,
It'd
actually.
pretty
It would
ironic.
be very poignant in a lot of ways. And the
Yeah.
fact that they've actually kind of got their act together. I mean, for all the people that didn't like Trump, and again, you can't go into politics too much and say, oh, I like this guy, I don't like that guy. But he had a point about Europe being very dependent on Russia, and he pointed it out, I don't know how many times while he was in office, and just kept drawing attention to the fact that Europe, especially Germany, have made themselves so reliant on Russian gas. They weren't paying their way in terms of NATO and defense spending, and they were kind of living a bit in this sort of, unfortunately, I wish it wasn't this way, but this kind of parallel universe where everything was safe and Putin was completely to be trusted, and would be very passive, and just keep things going because trade was important. And that clearly hasn't been the case, and they've really been caught out. I mean, at least they've responded in a kind of united way, now, which may actually, as you say, that could be a real driver for Europe in the future. And perhaps it could also bring more trade into Europe on the defense side as well, and more of the infrastructure and the green spending and things like that, looking sort of, zooming out a bit further. I'm trying not to zoom in too close.
They'll do green. They'll still do green, but they'll be tanks.
Maybe to defend
military equipment. It'll be military equipment. I think Germany's going to realize they're going to have to, not totally rely on the U.S. or NATO, and they're going to have they're going to have a big buildup. So I mean,
I agree with that.
You're looking at traditional, long time adversaries there between Germany and Russia too. So, so here we are, Macrodisiac. Why don't you tell us a little bit about your business and how you help people stay on top of, very difficult markets that we have right now?
Yeah, I mean, well, basically the whole idea is that we try and bring in the macro perspective, so what's going on in the macro world, and provide context in an everyday language. Because I think a lot of people get wrong with macro is they think it's either very complex, or it needs, and it's often dressed up in very complicated language and everything else. And also a lot of the time they think it's about predicting the future. And that for us is completely wrong. It doesn't need to be complex. It doesn't need to be complicated language. We use very colloquial language, and, a fair bit of swearing, to be honest, when it's necessary. And we just kind of, we're trying to get to the point. It's not something to be scared of, and it's not about predicting the future. It's just about being aware of the risks. And that really, I suppose, is probably what you could, boil it down to, is risk awareness.
Okay, great. We see an example. You want to show us something like what you send out? Okay. Oh, there we go. So both you and David write China's consumption crunch.
Yeah, that's something, again, it's been pushed to the back now. China, we've been flagging this since last year. China's been trying to stimulate consumption, okay, on their domestic side, okay, and it's really not coming through. It's lagging, and they're just not able to do it. And again, we've just laid it out here, what it's about. Why aren't firms hiring? Obviously, it's hard to get consumption up when you haven't got employment at the levels that you want it to be at, and trade is obviously struggling as well for a lot of different reasons.
The zero tolerance to COVID there? They just lock everything down. So couldn't that be another factor? If I haven't heard any news, but that there must have been some spread of COVID during the Olympics, and we're not hearing about. Are there new lockdowns after the Olympics?
I haven't seen any new lockdowns. I think it's just very much they're just sort of rolling as they're kind of finding little clusters, then they're kind of locking down local areas. But there's really it's a continuation of the same policies that they seem to be kind of moving away from in kind of background actions. You know, that they're looking at approving Pfizer's vaccine. They're looking at other vaccines as well. Where they're looking at the pills. They're looking at other treatments essentially that they can kind of use together with their with their own sort of processes, whereby that will mean they won't need to lock down, they won't need to be as harsh. And I mean, there hasn't been. It's not that they're kind of locking down whole areas for weeks at a time. It's just sort of like it's very short and sharp, but obviously it's very disruptive. So it's very hard for anyone to make any lasting decisions.
Are you bearish China, Tim?
I'll
I mean, they had to recover. Huh?
Yeah, I am. I really don't see China as in anywhere near the kind of positive light that many do. I think it's going to go the same way that Japan went back in the 80s, at the end of the 80s. Really, I struggle to see how they can live with those debt loads, especially at the same time as everything else is going on. And yeah, I can't make the positive case for the Chinese economy. I really can't.
Okay, interesting note to end it on. So, what's interesting is the alliance of Russia and China. Those are the two worst performing equity markets in the world. Yeah. So interesting that they're both under pressure. Probably got to be some type of buying opportunity in these down the road, at least on a relative. Are you bearish of the U.S. market here? Do you think it's just going to be a bear market rally in equities, and we're going to take out last Thursday's low on the invasion low, take that low out too?
Yeah, more than likely. I mean, and again, that's where we often talk about as one thing that you're asking about, sort of how we manage things. David's sort of got a great analogy that he talks about the pistons in an engine. And the different themes are sort of represented by these pistons. They're coming in and out of focus as one goes down, another one comes up. And obviously, we're only a couple of weeks away now from the Fed meeting.
Yeah.
That's going to be the next thing that's going to come into play. A lot of people talking about maybe the Fed aren't going to hike as much, because of this that's going on. I mean, we're not so sure. We're not so sure.
Go a half?
I think that I don't think they'll go 50. I think they'll definitely go to 25. I don't think they'll go 50 just because they won't want to disrupt the markets any more than necessary. Okay. But Bullard was still talking only on Friday. And I know Bullard's not necessarily the best representation, but Bullard is obviously quite a good representation of the hawkish side. He wants his 100 basis points by July. Waller, one of the governors as well, he's very much thinking along the same lines. They want to start QT as well. So that's a big headwind for equity markets. And you even got Goldman, I think it was Goldman Sachs earlier today, they're saying that they see the terminal rate being at sort of 2.75% to 3%, which, and they've added another hike to their forecast for next year, because of the risks that we're seeing. So I find it's a really tricky environment to just say, the Fed are going to cut, they're going to bottle it, and that will be the end of that. Equities will go up again, and we'll all dance in the streets. It's far too simplistic. You've got to be aware that inflation is high, and the Fed really can't sit around and do nothing. And obviously, how is the fiscal side going to play into it? The government, the US government can't come in this year with midterms. High inflation, people are already sort of facing a crunch. How would they normally respond to high inflation? They'd increase taxes. They'd try and do things like that to bring spending down. They can't do any of that this year. So really, it's all on the Fed. So I don't know that you can.
And don't think that Putin overlooked.
Do nothing.
Yeah, and I don't think you can say that Putin wasn't aware of the pickle the Fed is in.
Oh no. Yeah, I'm sure he was aware of that. At the same time as I think he was also aware of Germany's dependency and everything else, which is why he played around a bit through, or Gazprom played around a bit through the winter, early winter time as well. So yeah, it's a fascinating time at the moment, Dale. It really is. I wouldn't make any long-term predictions at all. Just look at all the predictions that came out for the year ahead that the sell side always do. At the end of the year, they did those in December, and look where we are now. We're barely even through February, and it's completely all out the window.
Well, I predict there'll continue to be a lot of predictions.
Definitely. That's definitely always in a bull market.
You like that bet?
Always in a bull market. I like that one.
Thank you, Tim. Really great catching up with you. And
you too, Dale.
good luck in navigating this and helping people understand what is really a complex market with pretty exaggerated moves happening right here overnight, etc. So not an easy job to try and keep people out of trouble in these markets. Good luck with that.
No, thank you, mate. Yeah, we'll try our best.
Okay, everyone, Tim Vollans, and you can find him at Macro DGAC. Is that it?
That's right.
At .com, and David Bell and him they collaborate, and look, he has a looks like a free newsletter right there on the front of his website. Sign up, and we'll see everyone for Turnaround Tuesday. The team will be with you on the morning edge in 18 minutes. And remember, Tim, don't just count your pips, count your blessings.
Agreed. Love it.
All right, buddy. So thank you, my trading warrior brother.
Take care, everyone.
Yeah, good luck, and we'll be talking to you tomorrow. Adios. Good stuff, Tim.
Cheers, man.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.